So I opened an account on this app called Jupiter. Took me about 3 minutes. No branch, no forms, nobody asking me for 6 photocopies of my PAN card. And at the end of it, I had a savings account, a Visa debit card, and a UPI ID ready to scan any shop in this country. But one small problem, Jupiter is not a bank. It doesn't have a banking license. Legally, it can't hold any single rupee of your money. So the cash I just put in is sitting somewhere, and somebody is quietly earning off it. And the more I looked into who that somebody is, the more interesting this got. Because the biggest winner in India's neobanking boom might not be any of this shiny app at all. It might be an old bank from Kerala that most people have never once thought about. Let's get into it. A neobank is basically a bank that lives entirely inside an app. No branches, no counters, no passbook. You do all of it from your phone. But there is a catch here that almost nobody talks about. In India, a neobank legally is not a bank. The RBI has never handed out a single neobank license. As a category, it just doesn't exist on paper. So how does Jupiter give you a savings account at all? It borrows one. Every neobank in India has to sit on top of a real licensed bank. App builds the nice screens and experience. The licensed bank behind it holds the actual money and carries the legal responsibility. The app is the shopfront, the bank is the vault, and that one setup changes everything about how these two kind of business work. Take a normal bank, say SBI or HDFC. It's built around thousands of branches and a decade-old software. A neobank is built around one thing, an app that actually feels good to use on 25-year-old's phone. No branches also mean much lower running cost, which is exactly how neobanks get away with zero balance accounts and all that cashbacks. But the real difference, the one that matters, is the license. A regular bank can take your deposit and lend your money out on its own, but a neobank can't do either without a partner holding its hand. And once you get into that, the whole Jupiter story falls into the place. Jupiter's founder is a guy called Jitendra Gupta, and he was in some college kid with a hoodie and a dream. He's a chartered accountant who had already built and sold a payments company, Citrus Pay, to pay you. So when he started Jupiter in 2019, this was a second-time founder who knew exactly how boring and how profitable Indian banking really was. His whole pitch was that a bank account shouldn't feel like a core. It should be smart. It should nudge you to save, show you where your money is actually going, maybe even feel a little fun to open. Turns out people wanted that. Jupiter launched with a waitlist, and within about 10 months, it had close to 1 million customers. At its peak, it was signing someone up every 15 seconds, and it did all of that with no banking license of its own by tying up with Federal Bank for its real savings accounts and later CSB Bank for its cards. The money showed up fast too. Over $180 million across its rounds from names like Tiger Global and Sequoia, and even Neobank, the Brazilian company that's the biggest neobank on this planet. At its high point, Jupiter was valued at around $710 million. Then it did the classic neobank move. Start with a savings account, then pile everything else on top of it. Savings sports, a reward system, early salary, mutual funds, and digital gold. The account is really just the front door. The actual business is selling you what is inside. And then in June 2022, the RBI did something that should genuinely worry anyone building on top of somebody else's license. It put out one short circular. Non-bank wallets and prepaid cards could no longer be loaded with credit lines from NBFCs. Sounds dry and technical, right? But in plain terms, a whole buy now, pay later business that a lot of fintechs were quietly running got switched off. One page, barely any warning. Jupiter was one of the companies that had to pull its prepaid card. And that's the fragile bit of this model that never make it into the ads. When your business runs on someone else's license and someone else's rules, the regulator can rewrite your future overnight. You are a tenant, you are not the owner. Jupiter's answers was to grow up. In 2024, it got its own prepaid payment instrument license from RBI instead of borrowing one. It pushed harder into lending through registered NBFCs. And it is reportedly being eyeing a stake in SBM Bank India, which tells you where it is heading. Because in this game, the dream is always the same. Stop renting and own the thing yourself. So back to my money. When I load cash into that Jupiter app, where did it actually land? At Federal Bank. My savings account is a Federal Bank account. My debit card is issued by Federal Bank. My deposit is insured by DICGC up to 5 lakh rupees. Exactly the same as at any big bank. Jupiter built the app. Federal Bank is holding the actual rupees. And this is the part I find genuinely clever. There is an old line in investing. In a gold rush, don't dig for gold, sell the shovels. Most neobanks are one who is digging, burning cash into grab customers and scraping over razor thin margins. Federal Bank quietly decided to sell shovels instead. Back in 2021, it signed up not just Jupiter but FI as well, two of the biggest neobanks in this country. It didn't fight the fintechs, it became their plumbing. Every Jupiter or FI account is underneath a Federal Bank account. Here is why that is smart. The hardest, the most expensive job in banking is pulling in cheap deposit. The low-cost money bankers call CASA. Normally you spend crores opening branches to get it. Federal Bank let young city phone-first Indians pour deposit in through someone else's app and barely spend anything on branches to do it. The neobank pays for all of the marketing, Federal Bank keeps the deposit. On top of that, it gets a slice of the card economics every time that debit card is swiped. Plus a whole new young customer base it was never going to reach from a branch counter in Kerala. Just look at who is carrying what here. The app is holding the cash burn, the marketing spend, the regulatory landmines. The bank is holding the license, the deposits and the fees quietly. So, what does all this mean for Federal Bank as a stock? Federal Bank is a mid-sized private bank out of Aluva in Kerala and it's been around since 1931. For years, people treated it as a bit dull. Solid, safe, nothing to write home about. Then in 2026, the stock climbed to fresh all-time highs, trading around 324 rupees in late June, worth roughly 8,000 crore rupees. And what the market is rewarding is in some moonshot. It's a boring, done really well. Steady deposits, bad loan kept under control, and a cheap, clever way of pulling in young customers through these fintech rails. The neobank tie-ups are only one thread in much bigger story, but they are a neat example of an old bank staying relevant when the world shifted under it. Which is kind of the whole point. In this gold rush, everyone is starting at the shiny apps. Sometimes the smarter money is on the unglamorous company quietly renting out its vault. Before you get too excited about any of this, the story has a real holes in it. On the bank side, the risk is the regulator and the reputation hit. If a fintech partner fumbles its KYC or a digital lending rule suddenly tightens, it's the licensed bank that has to answer to the RBI. June 2022 showed just how fast that ground can move. And the big question hanging over all of it, will the RBI ever hand out a proper digital banking license? There has been a Niti Aayog proposal floating the idea for a while now. But for the moment, that door is shut. Which means every neobank in India still lives or dies by its partner bank. And every partner's bank quietly profits from being the one they can't do without. So, next time an app opens your account in 3 minutes flat, the real question is not which app looks the coolest. It's whose vault it actually using. Because in finance, the quiet company holding the license is very often the one that end up winning. That worked out how to rent its license to the whole wave. If this made you look at the app on your phone a little differently, so that's neobanking. A shiny app on top, a real bank underneath. And the one quiet player from Kerala that worked out how to rent its license to the whole wave. If this made you look at the apps on your phone a little differently, you know the drill. Like, subscribe and send this to that one friend who still swears Jupiter is a bank. I'm Akhil, this is Analyzed, and like always, every number has a story.